Hello traders, you are welcome to my video on the LWMA. The LWMA stands for Liquidity Weighted Moving Average. So if you are looking for a more accurate and responsive moving average that takes market liquidity into account, then this is a good indicator for you. Okay, stick around as we break down how the LWMA works, how to use it, and why it is a must-have for Forex traders. Before we jump in, make sure to hit the like button, subscribe to the channel, and turn on notifications so you never miss out on any of our Forex trading tips and strategies. Okay, let us just get started. What exactly is the liquidity weighted moving average? Well, unlike traditional moving averages, the LWMA does not just look at the price of the asset. Okay, it also considers market liquidity. So, in simple terms, this means it weighs price movements more heavily when there is higher trading volume or liquidity in the market, making it more responsive to significant price movements. Now, this is a huge advantage over traditional moving averages, which often lag behind because they don't take liquidity into account. The LWMA allows traders to filter out market noise and focus on real trends. So that gives you a clearer picture of where the market is headed, right? It's especially useful in the fast moving Forex market where liquidity can change quickly and dramatically. So now let's just quickly talk about how the liquidity weighted moving average works in practice. First of all, we are going to talk about incorporating liquidity. The LWMA adjusts its calculation based on market liquidity, meaning it places more weight on price movements that happen when there is more liquidity. So what does that mean? When more traders are active in the market, yeah, this indicator signifies that, identifies that by adjusting its calculation, based on that, based on market liquidity. So this makes the LWMA more sensitive to significant market moves and less influenced by smaller, insignificant price changes. Okay. Secondly, one of the biggest issues with traditional moving averages is that they can often react slowly to real market conditions, especially in volatile markets. Because the LWMA is more focused on the actual flow of market liquidity, it filters out noise, giving you a cleaner and more timely view of the trend. This is particularly useful in choppy or sideways markets, where traditional moving averages can give misleading signals. Because the LWMA accounts for liquidity, it can react to price changes more quickly when liquidity is higher. So that helps you identify trend shifts and market reversals before they are fully confirmed by other indicators. So this gives you the edge in making faster and more informed decisions. Okay, now that we know how it works, let us just look at how you can actually use the liquidity weighted moving average in your trading strategy. First of all, you can use it for trend identification. The LWMA is excellent for identifying strong trends. When the price is trending strongly, the indicator will be more sensitive to the bigger moves. Let us look at this. Just watch out, right? So can you see how the LWMA, can you see the nature of the LWMA here when there was high liquidity? Just look at it real quick. This, you can see how it expanded, right? You can see how it expanded during this period where there was high liquidity and the trend was strong. Compare that to what happened here. You can see when we had low liquidity around this zone. Can you see how the indicator narrowed? The indicator narrowed, right? But it widened when there was high liquidity, when the trend was strong. You can see This is another sell trend, right? But the width of this indicator, you can't compare it to this, can you? Because here, can you see that the trend was not as strong as what we have here? In fact, currently it looks as if the price is already reversing to the upside. So before the indicator could widen enough, you can see that when the sell was consistently going, when the trend was consistently going down up to this point, it was consistently going down up to this point. You see that at some point the indicator started widening, but when the reversal began to happen, you can see that the indicator now started narrowing again. So this indicator is really useful, in identifying momentum. All right, it's useful in identifying momentum. Whether you are trading a bullish or bearish trend, the LWMA can help you confirm the market's momentum. Also, you can use this indicator for trend reversals. It's useful for spotting trend reversals, right? The indicator reacts faster when there is a change in liquidity. It can help you spot when a trend might be losing momentum or when a market reversal is about to happen, just like I identified around here, where you notice that the bands are widening, the indicator is widening, and suddenly it begins to narrow again. It shows that there is a possible trend change coming in. There is a possible trend change coming in, just like what we have happen here. Okay, so pay very close attention to that. This is extremely valuable for traders who want to enter or exit trades at the right time before a reversal is fully confirmed by other indicators. Also, this indicator can be very valuable with respect to support and resistance. Just like any moving average, the LWMA can also serve as a dynamic support or resistance level. If the price is above the LWMA, it may act as a support, as you can see, acting as a floor, right? You can see acting as a floor, rejecting price to the upside in a bullish trend, right? But if the price is below the LWMA, you're going to see that the LWMA is going to be serving as a dynamic resistance, rejecting price. You can see that, acting as a dynamic resistance. Okay, so this can be an excellent tool for entry and exit points, especially when combined with other technical analysis tools. Now, you might be asking, why is the liquidity weighted moving average especially good for Forex traders? Well, the Forex market is highly liquid and can be extremely volatile. This means that market conditions can change rapidly and traditional moving averages might not keep up. So the LWMA, on the other hand, is designed to respond to changes in market liquidity. This makes it a perfect tool for Forex traders who need to be more reactive to sudden price changes. Okay, it helps you filter out irrelevant price movements and focus on the big trends that matter. So whether you are trading major currency pairs or less liquid markets, the LWMA can help you make more informed decisions and stay ahead of the market. So to sum it all up, the liquidity weighted moving average is a powerful tool that can give you a more accurate view of market trends by factoring in liquidity. Whether you are using it for trend identification, spotting reversals, or determining support and resistance, the LWMA is a flexible and dynamic indicator that can enhance your trading strategy. If you found this video useful, don't forget to hit the like button, subscribe to the channel, and turn on notifications so you never miss any trading tips and strategies. Let me know in the comments below how you plan to use the liquidity weighted moving average in your trading strategy. Thank you for watching, and I'll see you in the next video. Happy trading.